Hello everyone. In this video, we are going to discuss about the National Small Savings Schemes. So in the examination point under the financial services, so now we are going to see in detail about this National Small Savings Schemes. So we'll begin with the basic acts and rules which are governing these accounts. So generally, all these National Small Savings Schemes are governed by the Government Savings Promotion Act of 1873, and one of the phenomenal rules for these schemes are this the recently issued GSPR, that is the Government Savings Promotion General Rules of 2018. So all these schemes, we have totally 9 schemes under this National Small Savings Scheme. So all the schemes, the last recent amendment, phenomenal amendment, took place on the 12th December of 2019. So on 12th December 2019, a gazette passed with all the amendments in these 9 schemes. So this is a very basic fact about this National Small Savings Scheme. Now, let us step into this GSPR. What is this GSPR and what are all the important things which were discussed in GSPR? Let us see now. So, this, as I told, the Government Savings Promotion General Rules. This rule is effective from 5th October of 2018. What are all the important things that which were discussed in this GSPR? So first point, so one NRI, a non-resident Indian. So a depositor, when opening an account, he is an Indian, and after that, if he or she becomes NRI, that is a non-resident Indian, he or she can continue the account very well, but the benefits will be available only on non-repatriation basis. What is that non-repatriation basis? So the benefit will not be credited directly into their foreign account, that is their NRO account. So all the maturity amount will be credited in their own savings SB account inside India. So this one we call it as non-repatriation basis. And the next important thing discussed in GSPR is that the is about this PAN card, the permanent account number. So the PAN card is made compulsory from this amendment of GSPR. So PAN card is compulsory after this GSPR, and a PAN card should be submitted by the depositor within 6 months from the date of opening an account, or else the account will be ceased to be operational. So, or else one cannot operate their own account. So, this is one more important thing. And then an account can be operated either as a single or joint account. So, no other special accounts. So, either it can be single or joint account. And one more important thing, once an account opened as a single or a joint, it cannot be converted into one another. So a single account cannot be converted into joint, and a joint account cannot also be converted into a single account. And then under this GSPR, nomination is made compulsory and mandatory to all the types of accounts. So whatever may be the type of account, whether it may be a minor account or or an adult account, whatever it may be, nomination is made mandatory. So how many persons can we nominate? A depositor can nominate. So one depositor shall nominate 4 individual persons. So not exceeding 4. So maximum nomination that could be done by a depositor is 4. And what about the witness for nomination? So if the depositor is a literate depositor, in such case witness is not required for the nomination. And in case of illiterate depositor, so definitely 2 witnesses should be there to witness the nomination. I repeat, nomination is compulsory. We can nominate a maximum of 4 persons. And in case of witness for nomination, if in case of literate depositor, witness is not required. And in case of illiterate depositor, there should be 2 witnesses to witness the nomination. So that is all. And one more thing, how one can identify a depositor. So in this GSPR, they have defined the officially valid documents. So they have termed some officially valid documents. So what are all the OVDs, that is officially valid documents? Apart from Aadhaar and PAN, these 5 has been termed as officially valid documents. So what are they? Passport, driving license, voter's identity card issued by Election Commission of India, and then the job card issued by that MNREGA scheme, and then a letter issued by National Population Register containing the details of name and address. So by this way, one can identify the depositor. And further, under GSPR, they have mentioned there is the first schedule is all about forms. So every form has been numbered as follows. So if GSPR 1 means that is an account opening form. If it is GSPR 2, then that is a paying slip. So likewise, all the forms which we have been using for the nation under the National Small Savings Scheme, it has been numbered accordingly. And the schedule 2 of GSPR deals about the schedule of charges. This is very important in examination point. So questions will be like, they will ask the service and they can ask for what is the fees prescribed under GSPR. So now I have grouped these into three categories. So firstly, so what are all the things? The fees 100 plus GST is for some three services. That is, so for transfer of an account from one office to another, the fees, the schedule of charges as rupees 100 plus GST, and for pledging of account it is also 100 plus GST, and the charges on dishonor of check, that is the charges which will be charged on bouncing of a check, the same 100 rupees plus GST. So for transfer of an account, pledging of an account, and charges to be collected for a dishonor of check is the same as rupees 100 plus GST. And the fee for issue of a duplicate passbook, in case of any miss of passbook, one can apply for the duplicate passbook, and the fee for the same is rupees 50 plus GST. Not only for the issue of duplicate passbook, the fee for cancellation or any change of nomination is also rupees 50 plus GST. So now, as per this GSPR, cancellation is not allowed since nomination is made compulsory, but one can change the nomination as rupees 50 plus GST with a charge of 50 plus GST. So for issue of duplicate passbook and change of nomination, it is rupees 50 plus GST. And the fee for issue of statement of account is rupees 20 plus GST. So if one wants to get a statement for any income tax purpose, the fees for the same is rupees 20 rupees plus GST. And one more thing, the fee for issue of passbook in lieu of lost or mutilated certificate is rupees 10 per registration. So rupees 10 per registration. And finally, the fee for issue of checkbook in respect of savings bank account in a calendar year is also termed as, so in a calendar year, that is from January to December, so a depositor can get 10 leaves without any fee. So after 10 leave, the depositor has to pay rupees 2 plus GST per leaf. So this is the thing. So 10 leaves per calendar year is absolutely free, and after the 10 leaves, one has to pay rupees 2 plus GST for each and every leaf after that. But now a clarification has been received from the FS section as such. So until we have the stock of 20 check leaf book, the department can issue, the office can issue one checkbook in a calendar year free of cost. So since until we have this 20 check stock in our office, we can issue first 120 checkbook at free of cost to the depositor. So this is about the schedule of charges. So this must be kept in mind. This is very, very important in examination point of view, the schedule of charges. So now let us step into that next area, which speaks about the KYC norms. Know your customer. So the RBI frame this framework, this KYC norms, in order to prevent money laundering and also to provide for confiscation of money deprived from or involved in any money laundering. So this is purely based on the anti money laundering. So this is about that. So in order to prevent money laundering, so there are two kinds of implementation of norms in the post offices. One is know your customer, and the other is customer due diligence. So each and both are same, more or less same. And now we'll discuss about this in detail. So under this KYC, know your customer, there are three risk categories. That is, one is low risk, the other is medium risk, and one more that is high risk. For low risk category, the value of the amount for the depositor should be below rupees 50,000, and for the medium risk category, the value of amount in the for the depositor should be above 50,000 and below 10 lakhs. And for the high risk category, if a depositor value of the amount in a depositor's under the depositor's SIF, that is the customer identification file, is over and above the 10 lakh, then it will come under this high risk category. So these are the three risk categories under the KYC, the KYC, know your customer norms. So now we'll see what are the documents required for these risk category persons. So for low and medium risk categories, the documents required are now more or less the same. So the documents which we should get is that one ID proof, and the address proof of the depositor, recent photograph, and also the PAN card. Since PAN card is now made mandatory, there is no difference between the low and medium risk nowadays. So for both these risk categories, one must obtain the ID proof, address proof, photograph, and the PAN card. For the high risk categories, apart from getting the ID proof, address proof, photograph, and PAN card, the office should not forget to get the source of income. So these kind of high risk depositors should give a documentary evidence of the source of income for the amount over and above the 10 lakhs. So this is also important thing. Okay. So in KYC, there are two reports. There are two reports for in order to implement the KYC norms. So one is CTR. We call it a CTR. That is nothing but cash transactions report, and the other is STR. That is the suspicious or suspected transactions report. So what is the CTR? So whenever in a office, whenever a depositor's cash transactions exceeds rupees 10 lakhs in a month, then these types of transactions must be reported under this cash transaction report. So all the cash transaction that can be in a single time, or in a series of transactions, uh, the aggregate value of which exceeds rupees 10 lakhs in a month, those kind of transactions should be definitely reported in this cash transaction report. And the suspected or suspicious transaction report is nothing but um, whenever there is a doubt or any suspicion in the transactions, like any forged or counterfeit currency notes or any forgery in the documents. So these kind of transactions should be immediately reported under this STR, the suspected transactions reports. So these are two kinds of reports. Cash transaction report should be submitted by the head of the divisions on the third of every following month. Whereas suspected transaction, there is no time due. Whenever we find any suspicious transaction, immediately it has to be reported. So these are the two kinds of reports involving in the KYC norms. Now go for we'll go in depth. We can learn in depth about the each and every scheme in the National Small Savings Scheme. Now let us begin with the basic savings account. The savings account, the post office savings account. So for the savings account, as we all know, the rate of interest is rupees 4%, the 4% per annum. The minimum deposit amount to be deposited for opening a savings account is rupees 500. So the minimum balance has also to be maintained. Not only 500 rupees for opening the account, that 500 rupees should also be maintained. If for any reason, if the balance falls below rupees 500, then the non account maintenance fee is now rupees 50 per year. So whenever the balance of the account falls below rupees 500 for any reasons, then rupees 50 will be deducted from the account every year. And whenever the balance falls even below the 50 rupees, the account will automatically get closed. So this is about the account non-account maintenance fee. And there are two types of accounts. There is a single account and there is joint account. So in respect of savings account, please do remember only two adults can jointly open an account. So Please remember, only two adults can open the account jointly in respect of savings account. And as you all know, joint A account can be operated by all the depositors jointly, and joint B is like either or. It can be operated severally by either or any survivors of that account. So this is about the types of accounts. And now, after all these amendments, there is no pension account, no basic savings account, and one individual can only open one single and one joint account in the entire post offices. So, one single, one joint account per individual can be opened. And in case of check facility, as I told earlier, 10 leaves will be issued free of cost. And as whenever an office has 20 check leaf book in this hand, one checkbook can be issued free of cost until the stock, until they have that stock. And in respect of subsequent deposits, so minimum an amount of rupees 10 can be subsequently deposited in a savings account, and the mode of deposits can be like, it can be like cash or check or DD or pay order, anything like that. So this is about deposit. So the minimum subsequent amount deposit in respect of savings account is for rupees 10, only rupees 10. And in case of withdrawal, the minimum amount of withdrawal is rupees 50. So in respect of branch offices, branch office, a branch postmaster can issue sanction for a withdrawal for up to rupees 20,000 without getting any permission or without any consulting any of the superiors or any account office. So a postmaster can individually sanction an amount of up to rupees 20,000. So this is about the amount, the limitations for the branch offices. So now coming to the interest in respect of savings account, the interest is calculated from every April to March. So every March end, the interest will be credited into that savings account. So now let us see how the interest will get calculated. So in order to calculate the interest, we have a concept called interest bearing balance. So you can see in the screen. So this is called as interest bearing balance. In short, we will call it as IBB. What is this IBB? The interest bearing balance is nothing but the lowest balance between the close of 10th and the last day of the month. So in an account, the IBB is nothing but, so the minimum balance, the lowest balance between the close of 10th and the last day of the month, we call it as IBB. So we have to take all the IBBs of all the 12 months from April to March, and we have to make it an average, and on this average amount we have to apply this rate of interest of rupees 4%. So by this we can get the interest for that particular account. So whenever we get interest in fractions, the fraction should be ignored and the interest should be in a whole amount. So this is how interest will get calculated in SB account. So remember, the IBB calculation is that of the lowest balance between 10 and that of month end. So this is how the interest will get calculated. And very importantly, the interest is tax free only up to rupees 10,000. So whenever a depositor gets interest over and above this 10,000 rupees, automatically the TDS will be deducted from that account. So this is all about SP. And in respect of savings account, there is no maximum limit for the account, and there is no maturity period also for this account. So whenever a depositor wants, he can deposit. Whenever he wants, he can withdraw the same. So this is the basic thing about the savings account. Now let us see about the recurring deposit, the RD account. So the recurring deposit is a one which in which the amount will get recurred by as the days pass, the amount will get recurred. So in this recurring deposit, as we all know, so one fixed monthly deposits will be contributed by the depositors every month. So this fixed monthly deposit is that we call it as denomination. So the maturity period for a recurring deposit amount is 5 years, and this RD can be premature after completion of 3 years. And the minimum denomination is rupees 100, and it can be, the denomination can be in multiples of 10 and maximum no limit. So I repeat, minimum denomination rupees 100, and it can be in multiples of 10 like 110, 120, 130 like on. and the maximum is no limit. So for this RD, there is no restriction on number of accounts. In SB, we have seen that one depositor can open only one single, one joint account like that. But in case of RD, there is no restriction on number of accounts, and maximum also there is no such limit. The current interest rate for recurring deposit is that of 5.8 percentage, and the account can be opened by cash or check or any electronic mode. And the deposits can also be made through the MPKBY agents or PRSS agency systems. So this is all about. So in addition to that, we also have automatic transfer of deposit to the RD account from the savings bank account. So this is all the introductory thing about the recurring deposits. So in case of in the recurring deposits, up to 3 adults can open account jointly in case of recurring deposits. In SB, we have seen that only 2 adults can open jointly, whereas in recurring deposits, 3 adults can jointly open an account. So there is in this case also there is single account, there is joint account, and for subsequent deposit conditions, we have a conditions that is so whenever an account is being opened between 1st and 15th of a month, so the last date for paying the amount without any default fee is 15th of every month. So whenever an account is opened in the first 15th of a month, so the last date to pay in this account without default fee is 15th. But when an account is opened between 16th to month end, then the last date is the last working day of the month. So this is the subsequent deposit conditions. So deposit can also be made by cash or check, or we have automatic transfer from savings account, by withdrawal from savings account, and we have now recently we have this internet banking, mobile banking, so we can pay it from IPPB and also any other electronic mode approved by DOP and RBI. So by these means the deposits could be made in respect of a recurring deposit account. And now coming to the defaults, if the monthly deposits are not paid within the last date, either within the 15th or at the month end, the default fee is rupees 1 for 100 rupees denomination. So we can calculate accordingly. So the monthly deposit, the default fee is rupees 1 for every 100 rupees denomination. So how many defaults can we allow in a recurring deposits? So we can allow up to 4 defaults are allowed in an account, RD account. So if it exceeds 4 defaults, the accounts will become discontinued. So after this 4 defaults, the account should be revived within 2 months, 2 months from the month of fourth month. So 4 defaults can be allowed. After this four, this account should be revived at least within 2 months. If not renewed, no further deposit could be done, and the account will become discontinued. So this is the rule about default. So remember, 4 defaults allowed, and it can be revived within 2 months. So in default, we have a condition like that. So whenever in an account the default is up to 4, if there is up to 4 defaults, then the depositor can pay any of the defaulted months or all the defaulted plus current months. But whenever the default reaches 5, all the defaulted months should be paid in one lump sum. So up to 4, when the default is up to 4, so we can split and pay. So we can split and pay for any of the defaulted month, whereas once the defaults become 5, all the default should be paid in one lump sum. So and whenever the defaults it becomes 6, the account will become discontinued and it cannot be revived at all. So this is about the default structure. In case of rebate. So for advanced deposits, we are giving rebates. So you can see this table in the screen. So whenever if the number of advanced deposits is from 6 to 11 deposits, then the rebate of for the account of denomination of rupees 100 would be rupees 10. So if the rebate is made for rupees 12 to 17 deposits, then the rebate would be 40. And the table goes on. 18 to 23 means it is 50. 24 to 29 means 80. So one depositor can even pay advance for even the whole 60 deposits. He can pay in one lump sum. And for that, rupees 200 is being allowed as rebate for rupees 100 denomination. So this is a table for rebate. So we can pay even up to 60 deposits as advance deposits. So and then now we can see about this concept of interim withdrawal being allowed in a recurring deposit scheme. So only one interim withdrawal is allowed during the entire 5 years period. And this kind of withdrawal is allowed only after 1 year from the date of opening. So it is allowed only after 1 year after the account has been opened. And the conditions for withdrawal is that at least 12 deposits should have been paid in the account. So 1 year should have been completed. At least 12 deposits should have been paid, and the account should not be a discontinued one. How much amount can we allow in case of such interim withdrawal? A maximum of 50% of the amount can be allowed as the interim withdrawal, and the amount of withdrawal should be divisible by rupees 10. So I repeat, one withdrawal could be taken in the entire 5 years period, and that also after 1 year after opening, at least 12 deposits should be paid. So it should not be a discontinued one, and maximum 50% of the amount could be given. So in respect of branch offices, these kind of interim withdrawal should have to be passed by the account office. So the interest will be charged as per the interest fixed for the RD interest rate plus 2%. So the interest for this interim withdrawal is 2% more than the RD interest. So now the interest is 5.8. So 5.8 plus 2 is 7.8% would be charged on this as interest for this interim withdrawal. So this withdrawal, the loan amount or the interim withdrawal, it can be repaid in one lump sum or in installments. The likewise. So how repayment of withdrawal could be made? The depositor, as I told earlier, he or she can repay the amount of withdrawal in equal installments or even in lump sum. The repayment should be in equal monthly installments, and it should be the multiple of rupees 10. And this kind of repayment can be made only along with the monthly deposits, and the loan amount or the withdrawal amount, it cannot be paid separately. So along with the monthly deposits, these kind of amount should also be made. Now we can come we'll see about the facility of PMC, that is the premature closure of RD account. So the premature closure is allowed in an RD account only after 3 years from the date of opening. So PMC is allowed after 3 years from the date of opening. So after 3 years, the PMC can be allowed, and the interest will be allowed only at the rate of savings bank interest. So in case of PMC, the interest will be at the rate of SB interest. That is only 4% will be given as interest in case of premature closure of an RD account. So in case of premature closure, the very important thing is that the default fee paid, if any, by the depositor will be refunded to him. So if any default fee is being paid by the depositor, it will be refunded to him, and the interest on withdrawal, if any, paid by the depositor, will also be refunded. So I repeat, PMC can be made in 3 years. We will give only 4% SB savings bank of interest to such PMC premature closed accounts, and in case of premature closure, the default fee paid, if any, will be refunded, and also the interest on withdrawal, if anything is paid, will also be refunded. Now, let us see about the closure of RD account. So, one RD account that can be closed after 5 years on maturity. So, whenever the closure amount payable is over and above rupees 20,000, it can be paid either through a cross check or to credit it to the savings bank account or the bank account, the any other bank account of the depositor. So, this is about closure. Now, about the extension of an RD account. So there is an option to continue the RD account even beyond the maturity period. So an RD account, the RD account, one RD account can be extended for for one more period of 5 years after this maturity. Such kind of RD extended account, it can be continued with or without deposits. So it can be continued with deposits or it can be continued without deposits. An extended RD account can be closed at any time. It can be closed at any time, and the amount will be paid as per the table. There is a table for such calculation. The amount will be paid as per the table. So one can extend an RD account even after one more 5 years. It can be continued with or without deposits, and the extended RD account can be closed anytime, and the amount will be payable as per the chart. So one more striking feature, unique feature in this recurring deposit is that the protected savings scheme. In short, we call it as PSS, the protected savings scheme. This is, as I told, this is a unique feature available only to the recurring deposit scheme. So this protected savings scheme is nothing but whenever a depositor opens a 100 denomination account, and if he paid for the account for about 24 months, so after 24 months, if in case the depositor expires, the maturity amount of rupees 100 denomination will be paid to the nominee. So generally, in case of any claim, generally the amount in that account along with the scheme interest will be paid. But in this, under this protected savings scheme, if in case a depositor pays for 24 months and after that he expires, the maturity value of that 100 rupees RD account will be paid to the nominee. So this benefit is restricted to a maximum of maturity value of rupees denomination 100. But there are some conditions in order to avail this PSS. And the age of the depositor at the time of opening the account should be between 18 and 55 years, and the account should have been paid for 24 months. 24 months. The account should have been paid for 24 months. 2 years should have been completed. The 2 years should have been completed. There may be defaults, but the default should have been paid, and it should be there can be default, but the default should have been made good by the depositor. So during that first 24 months, that is the 2 years, no withdrawal should have been taken in that account, and the account should not be a discontinued one. Claim for these kind of protected savings schemes should be preferred within 1 year from the date of death of the depositor, and this kind of protected savings scheme claim will be sanctioned only by the head postmaster, not by the sub postmaster. It will be sanctioned only by the head postmaster. So this is one of the striking feature. So like insurance, so whenever a depositor pays for rupees 24 months, and if these conditions also satisfies, so the nominee can get the maturity value of rupees 100. So this is with this one we call it as protected savings scheme. So with this, we have seen in this class, we have discussed about the general basic thing about the National Small Savings Scheme, about the GSPR, the schedule of charges, and also two schemes we have covered, that is a savings bank and the recurring deposit scheme. So the rest of the things we'll cover it in the next classes, and thank you all. Thank you so much. So please do subscribe the channel, yours Kayveeyes, for further more updates. Thank you all. Thank you so much.